You just decided to lower the interest rate, although the franc has weakened and inflation hasn't fallen below zero yet. Walk us through your reasoning. Did you, when you discussed today's decision, did you also discuss to hold interest rates?
So today we decided to lower interest rate from 0.5% to 0.25%. And the reason for this interest rate cut is that inflationary pressure in Switzerland is low, and also there are significant downside risks for inflation in Switzerland. And this led to this decision to lower interest rates.
And will this be the final cut of this current cycle?
So we will meet again in June. We will look at all the data, we will discuss, and then we will take a decision if we need to adjust monetary policy.
Your interest rate is now at just 0.25%. So it's just one standard size cut away from reaching zero. What I'm wondering is, could the next step you're taking, if it's going to be a cut, could that be also smaller than 25 basis points, just so you stay above zero?
So I cannot do forecasts on interest rate cuts. As I said, we will meet again in June and then September and so on, discuss monetary policy and come up then with decisions.
However, you have been quite vocal that you see the risks to inflation more to the downside. Can you expand a little bit on that? Like with your move today, did the probability of further cutting go lower at least?
So generally, uncertainty is very high at the moment. So it's geopolitical uncertainties, but it's also trade policy uncertainties, fiscal policies, also some uncertainties. And this means that also the downside risk to the foreign GDP is high. This also means that then, for example, for Switzerland, the downside risk is higher also for inflation.
Okay. In the past, let's look at the franc, right? So in the past, SNB has regularly intervened in foreign exchange markets to steer the franc's exchange rate. However, for the last 4 quarters, so for all of 2024, you have basically kept out of markets. Now, you could say that this is something you're doing because you are eventually, ultimately, scared of Donald Trump brandishing you as a currency manipulator again. Is that true?
I can clearly say Switzerland is not a currency manipulator. When we intervened in the FX market in the last decade, it was because we wanted to fulfill our mandate, which is price stability. And in a situation where we had appreciating Swiss franc and very low inflation, even sometimes negative inflation, these FX interventions were necessary to maintain price stability. This was not to gain a competitive advantage for Switzerland.
But so you will not refrain from using them now if you need them for price stability?
So I can assure you that we are ready to use all our tools to ensure our goal, which is price stability.
Let's look a little bit in the future. So on April 2nd, global like-for-like tariffs from Donald Trump are set to kick in. That could change central bank rate paths across the board, expected like around the world. How hard do you think will this hit Switzerland? Or is Switzerland more worried about specific industry tariffs, maybe on pharma goods?
Actually, this is very difficult to tell at the current junction because there's a lot of back and forth in this trade policy. And also the effects are quite complex. There are direct effects, there are indirect effects. It also depends on the price setting power of individual firms. So at the moment it's very difficult to foresee the exact effects.
Let's talk about gold. Other central banks have stepped up their gold purchases because of the high gold price. And also at the same time, Trump is discussing measures to make holding US treasuries less attractive. Is there a discussion within the SNB that you would shift your reserves from the dollar, from treasuries, into gold?
So the Swiss National Bank holds around 1,000 tons of gold, 1,040 tons to be exact. And the last gold transactions that we did are now quite some time back. And at the moment, we do not have plans to change our gold holdings.
Then one question we stay with the topic of Trump. One question on Bitcoin. You have been quite vocal on your disdain for Bitcoin as a reserve asset. You've called it a niche phenomenon. Now, Donald Trump wants a national strategic Bitcoin reserve in the US. Does that change your position and your view on Bitcoin at all?
So, our FX reserves, they have to serve one goal, and this is monetary policy. And to fulfill the criteria to be useful for monetary policy, there's certain things. Like, for example, it's the preservation of value, and as you all know, cryptocurrencies have large fluctuations in value, so this is not given. Also, liquidity is very important. So these FX reserves can be used very quickly for monetary policy. And also there are some question marks regarding cryptocurrencies. And then finally also, there's no robust legal framework, and also it's cryptocurrencies are basically software, and as you know, softwares have bugs, and this is something. So the safety of the asset is not given at the current juncture.
So the SNB will stay out of crypto assets?
We do not have plans to buy crypto assets.
As a final question, let me touch on UBS. The SNB has been vocal on that the bank should back its foreign subsidiaries fully with capital. UBS says that this might force them to re-domicile, leave Switzerland. So I'm wondering, do you not care if UBS goes away?
So I think Switzerland, with its stability and its long track record of stability, is a good place to do wealth management, to do private banking. So this could be beneficial. Regarding this, the capital, from a financial stability point of view, it is clearly the best solution to back these foreign participations fully with capital.